Good morning, good evening, everyone. Welcome to my channels. For those who don't know me, my name is Karina Fabi. I'm a full-time trader, day trader, and also I run a live trading room where we all trade at real time. And on this series of videos, I will go through the book, Price Action for All. And that is finally going to give you an insight on what price action is all about. You can get the book from my website at watchmytrain.com on the tab here that says book over there. Then you can get over here on English translation. Of course, I'm Spanish speaking, so I beg your pardon for my accent, but I'm going to do my best to talk about what actually been trading for the last 15 years, which is price action. I do not use indicators. I do not use chartism. I basically go for what the market is actually doing. And price action gives you that full insight in how to trade with the market, buy prices and sell prices. And that's actually the most difficult thing for many day traders, because they think they can go with the charts and they can use the indicators and everything's going to be fine. But at the end of the day, if you don't have a clear understanding if the market is to buy prices or sell prices, you might have the wrong understanding of the market. And even though you might be lucky one day, the next day your full analysis might just go to hell, so that's very important for us to kind of have an insight of price action. You can complement price action with many other things, but not the opposite, because the basics of everything is in where is the buy prices and where are the sell prices. Okay. And you can trade anything you want, only understanding price activity. So we're just going to go through the book. And first of all, of course, you got to see how price action started, who started it, how was the beginning of the price action. Okay. At the end of this series of videos, we're going to be able to have the right market areas set up, the range market areas, and the full intervals of the market. Okay, so that's the main thing, to just go from the very beginning, how we get to understand the price activity. Okay, you can use price action for anything except of those instruments that the market is being manipulated. For example, cryptocurrency, you don't use cryptocurrency with price action. Maybe oil prices, it's actually, you could, but also be aware that the fundamentals might be very aggressive with oil prices. And those things that you have to be with some commodities, some instruments are not really good to rely on price activity only. So make sure that you know where to use price action. So I'm gonna go through FX and then through index and many other things, just so you know. Okay, so this is a quick introduction about me, how I started it, all the learning, all the mistakes, and so you don't have the same mistakes, you don't have the same problems that I did on the beginning. So I'm just gonna get your experience, give you 15 years of experience on this book and on this channel, on this series of videos. Okay. All right, so the book is basically divided it in market areas, market pressure, how to understand the market pressure, and the pivots. The pivots is a good tool. It's a very good tool when you're a beginner using price action. And that tool is actually, it will help you to give you an insight of price activity. But at the end of the day, the idea is that you don't rely on the pivots. You rely on the only price action. But again, it's some sort of middle step that will help you to go through the understanding of price action. Okay, so let's go there. Price action, of course, is not a formula. It's an understanding, right? It's an understanding of the market. All right. is a full understanding why and how is the market acting in certain days, certain weeks, certain months, certain years. You're going to be learning day trading here with me, and of course how to scalp the day trading activity, how to be scalping. You know, I love scalping. I'm all in on day trading. That's my main thing. You know, when you live with your trading, then you kind of get really good at managing the trading on daily basis. So that's actually my goal for you as well. Okay. All right. So just a quick introduction. All right. So here you go. So let's say that these are the sellers and these are the buyers, and this is the equilibrium price. The equilibrium price is where the buyer and the seller meet a certain point. They meet a certain price. Above that price, you have buy pressure, so you have buy opportunity, and below that price, you have sell pressure and therefore sell opportunities. That's the equilibrium price. That's the balance price. Is where basically the market is with no speculation. They agree that that's the price that anything costs, like the euro against the dollar against the yen, gold against dollar, whatever. That's the equilibrium price, right? And that's a quick explanation how you actually understand the equilibrium price, which is pretty cool to know where you're standing, okay? So at the end of the day, the buyer and the seller will agree so that a pound of sugar, for example, maintains its equilibrium price and both parties participate in the market the following day. This same phenomena takes place in the financial markets. Markets always tends towards the equilibrium. And the opportunity comes when they lose equilibrium, when they lose the balance of the markets. That's speculation, basically. Okay, so there's stocks or currency price levels where no one will buy because they're overvalued. So when the price no longer rises, of course, it is convenient for any of the parties in the market. So the buyer takes the profit from it, so it closes the purchases. And as the buyer takes his profits or liquidates market purchases, the price will naturally fall. And that will give you the short opportunity. When the prices fall, it again gives space to new buyers to the market, while the sellers take advantage from it. Here again, the price rises. So in this way, the market ecosystem is always balanced. The key is to be fast enough to identify those opportunities on a daily basis. There is a misunderstanding that overvalued and overbought concepts. Most indicators will take the overbought information as if the seller are starting to take action. In price action, there's no such a thing as go short when it gives you highs or go short when it's overbought. So we will go deep on this concept later, okay? Because I've seen that all the time. You know, it's overbought, you had to short, or it's oversold, you had to buy. You know, or it's at the year lows, you have to buy. It's at the year highs, you have to short. In price action, you won't have those mistakes. Most accounts get stopped out because of they tend to think that way, because it's at the highs, it has to go down, it's at the lows, it has to go up. Eventually it will, but I'll give you exactly when that is going to happen. Again, it might be oversold for 1 week, 2 weeks, a month, maybe 2 months, maybe 6 months. You never know. So price action will help you to go exactly what the market is doing and acting, and you won't be having any trade ahead of time. This is very important. And I've seen thousands of traders just going through the same, shorting on highs or shorting at resistance and buying at lows or buying at supports. There's not such a thing. You might be lucky once, you might be lucky twice, but either your stop loss is going to get triggered many times, or you won't be traded on the right levels, on the right market situation. Okay. So old school traders will follow the trend or will speculate about trends. That worked in the 90s. and the normal economic cycles. But since last decade, that's not the case. Traders today must follow price action as it flows and by learning to be one step ahead of fundamentals. That's such an important concept, being one step ahead of the fundamentals. I mean, you've seen the calendars today. You've seen what's going on. And you know what's going on. Like the reaction is opposite all the times, the opposite. They hike the rates, dollar goes down, or they hike the rates in Europe, the euro goes down, or inflation is a good number for the US, the dollar goes down anyway, or the opposite. So you got to understand that the market discounts everything in advance all the time. 1 week ahead, 2 weeks ahead. So when the price is actually at the right moment, on the right level, you're going to know what to do way in advance. You're going to be buying when the information is within 2, 3, 5 days. You're going to be shorting the same situation. It's way ahead. Price action will get you always one step ahead of the fundamentals. Because of course you use fundamentals. We read the fundamentals, but not as everyone does. We don't wait for the information to be published. We traded already with that information, with that forecast. But the moment the information is published, we knew, like we traded that impact. So when the market published the information, we either took our profits or we just took the trade, the opposite that we've been trading the last week, discounting that information. I'm going to dive deep on this concept through my book. And when I get to the fundamentals, of course, non-farm payrolls, rates, balance, PMI, inflation, consumer confidence, all those things that unemployment claims, and so on. All right, so preparation, that's also a good one. Before I get to preparation, I'm just going to stop it here and I'll continue on the next video so you can dive in a little bit further on the concept that I already talked about, living price. So I give you this exercise. This is a pretty good exercise. Of course, I trade the markets and I trade every day. I'm a day trader, of course. So the exercise here is that you go through every day on the last, let's say, week or so. You can take euro dollar, you can take the pound dollar, you can take whatever, and try to find the equilibrium price of every day and see if you can find it. And then you can type me on the comments now in this video and we can go through the answers to see if you got it right. Equilibrium price, what's the balance price of the last, let's say, 5 sessions of the market? And then you have to put the date and the price, and I'll give you if you got it right or not. Because if you can identify the market, the price market, the price, the equilibrium price, everything else is going to fall into place right for you. But that's the main concept that I want you to understand. When is the market not under any speculation? And then you can understand what speculation means. And then we can catch on the opportunity. As long as you have a clear understanding, what is the equilibrium price for you? Where is that level for you? And it has to be on daily basis. Let's say today we are at Monday 25th, and just tell me what the equilibrium price is. And then yesterday, what the equilibrium price is, and so on. That's the first exercise on this video, and I'll see you on the next one.